Decentralized finance, or DeFi, stands at the forefront of a transformative movement redefining how the world interacts with money and financial services. Over the past year, this rapidly evolving ecosystem has undergone significant changes, marked by major policy shifts, technological advancements, and shifting market dynamics. To truly understand where DeFi stands today and where it might be headed, it's essential to explore the most recent developments shaping its path. In the spring of 2025, the DeFi landscape in the United States reached a pivotal moment. The U.S. government, under President Donald Trump, took a remarkable step by signing a bill that nullified a controversial IRS rule. This rule, if enacted, would have classified decentralized cryptocurrency exchanges as brokers, subjecting them to the same tax reporting requirements as centralized exchanges. For DeFi platforms, which operate without intermediaries and often lack user data, such requirements were seen as unworkable and even existentially threatening. Industry leaders voiced strong concerns, highlighting the technical and philosophical incompatibilities between DeFi's open protocols and the traditional compliance frameworks designed for regulated financial entities. The legislative reversal signaled not just a win for the industry, but also a recognition by lawmakers of the unique operational models underpinning DeFi platforms. This move quickly rippled through the industry, providing much-needed regulatory breathing room for developers, entrepreneurs, and users. No longer burdened by the threat of unworkable tax compliance, the DeFi sector saw renewed energy and innovation. Yet the regulatory conversation was far from over. By August 2025, leading DeFi advocates, including the DeFi Education Fund and A16Z Crypto, were urging the Securities and Exchange Commission to offer clearer, more tailored policies for blockchain-based financial applications. Their proposal, the creation of a safe harbor that would exempt certain DeFi apps from onerous registration requirements. The goal was clear: distinguish these platforms from traditional brokers and allow experimentation and growth without stifling regulatory overhead. This push reflects a broader understanding among policymakers and innovators alike that DeFi cannot and should not be shoehorned into legacy frameworks built for entirely different architectures. While policy debates continue, the technical bedrock of DeFi, the blockchain, has also evolved in meaningful ways. In June 2025, the Ethereum Foundation, steward of the world's most widely used smart contract platform, unveiled a new treasury policy that doubles down on its commitment to DeFi. Central to this policy is a decentralized finance framework known as DeFi Punk, designed to manage foundation assets while upholding the core principles that have made Ethereum the backbone of DeFi: privacy, security, and open-source development. The introduction of DeFi Punk signals a strategic shift, emphasizing not just innovation, but also long-term sustainability and resilience. By embedding DeFi values into its own asset management, the Ethereum Foundation is sending a powerful message. It sees the future of finance as decentralized, open, and community-driven. Security, however, remains a perennial challenge for DeFi. The open-source, composable nature of DeFi protocols, while fostering innovation, can also expose vulnerabilities, especially as complex financial instruments interact in unpredictable ways. In November 2024, researchers introduced Flash DeFier, a sophisticated detection framework aimed at tackling one of DeFi's thorniest problems: flash loan attacks. These attacks exploit intercontract dependencies, allowing malicious actors to manipulate protocols in the blink of an eye, often resulting in significant losses. Flash DeFier enhances static analysis, enabling developers to detect and mitigate vulnerabilities before they can be exploited. This advancement underscores the sector's ongoing commitment to safeguarding users and fortifying the architecture upon which decentralized finance is built. The market, for its part, has responded to these regulatory and technological shifts with a surge of interest. In July 2025, DeFi Development Corp. announced the upsizing of its convertible notes to $112.5 million, a testament to the growing investor confidence in DeFi's future. This investment not only reflects optimism about the sector's potential returns, but also signals a broader acceptance of DeFi as a legitimate pillar of the global financial system. As more capital flows into decentralized protocols, the pace of experimentation and deployment accelerates, bringing new products and services to a global audience. Taken together, these developments paint a picture of an industry in flux, but also in ascent. The nullification of the IRS broker rule has provided regulatory clarity and room for innovation. The call for a DeFi-specific safe harbor reflects a maturing dialogue between the industry and policymakers, one that recognizes the distinctiveness of decentralized systems. Technological initiatives like DeFi-Punk and Flash DeFier illustrate an ecosystem investing in both its philosophical foundations and its technical robustness. And the flow of capital into DeFi ventures demonstrates that, despite volatility and uncertainty, belief in the sector's long-term promise remains strong. But what does this mean for the everyday user or the curious observer? At its core, DeFi continues to strive toward a world where financial services are accessible, transparent, and governed by code rather than centralized institutions. From lending and borrowing to trading and asset management, DeFi protocols offer alternatives to traditional banks and brokers, often with lower barriers to entry and greater user control. The latest policy changes suggest that, at least in the United States, there is a growing willingness to let these experiments flourish, so long as they don't pose systemic risks or run afoul of basic consumer protections. Yet, challenges remain. Security will always be a moving target, as new attack vectors emerge alongside new innovations. Regulatory uncertainty, while eased in some respects, could return as governments refine their approaches to digital assets and decentralized systems. And as DeFi continues to scale, questions about governance, interoperability, and user education will become ever more pressing. Still, the momentum is unmistakable. DeFi is no longer a fringe experiment. It has become a laboratory for the future of finance, where new ideas are tested in real time and adopted by a global community. Whether through bold regulatory moves, technological breakthroughs, or market milestones, the past year has shown that decentralized finance is here to stay, evolving rapidly and relentlessly toward a more open, inclusive, and resilient financial system. As we look ahead, one thing is clear: the DeFi story is far from over, and the next chapter is already being written.